European Central Bank President Jean-Claude Trichet says the European crisis has reached systemic proportions, dragging European and U.S. markets lower. The German press reports that officials are backing a hard default for Greece. Bondholders could be hit with losses over 60%. And U.S. markets brace for the start of third quarter earnings season, with Alcoa expected to kick it off with a thud. I'm Alix Steele, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix Steele with The Street, and together we bring you the morning call. Scott, it was a nuts day on Monday. All the indices rallying 3% or more. What's your game plan for today? Would you be taking some profits?
Yesterday at the end of the day, I stated that, you know what, we just had a huge move. We had a 1,000-point move in the Dow. We've had about a 100-plus handle move off the lows. That we were trying to play pretty directional since we were so oversold. But now that we're not oversold anymore, market's going to have to prove that it can go higher. So if you want to stay with your positions, and I do suggest having multiple positions right now. I think we're in that kind of environment where you can make more in the market. Have a bit of a hedge on. Short some spiders and be long 4 to 8 positions, whatever you want to do, or 2 to 4, whatever you can handle. So this way, you walk in today and the futures are down 7 or 8 handles. You could then cover some of your spiders, so you make some money on the downside moving the futures, and add on the dip to the positions that you want, because I'd rather see you buy dips in this move until we get to a level that I think we're going to pose a bigger problem.
All right, so let's get to the chart to look at that bigger resistance level. But real quick, would you be shorting though now if you weren't overnight, if we're opening up 8 handles down on the S&P?
I think to press this down 8 handles is not the way to go. I'd rather see you try and buy the 8 handles down. You know, maybe we go a little bit lower, so you're going to have to really be a surgeon to get more out of it, unless we do pull in a little bit more than I think. But let's show you those levels where you could see on the chart. You know, yesterday was very important. You see this little line here? This is the 50-day moving average. We took it back. We pressed through it very strong. I know there wasn't volume, but there was a holiday. You know, we had the move off the lows. Here was that outside day that I've talked about till I'm blue in the face. I won't talk about it anymore. But this was entry number 1. You had the push up into the jobs number, and that's where we had a little digestion. And now we're opening a little bit lower. I'd like to see this 50-day moving average hold. I'd like to see a bit more digestion here, and then I do think we're going to make an assault on the upper end of this range in this 1220, 1230 area, as long as we don't get crushed by some, earnings in the next week or so. But I think we'll take that in stride.
Oh, okay, great. So then, is it fair to say that maybe today would be a blip in a bull market, or is it too soon to commit to that?
I would say digestion is good. You don't want things to go too fast. You don't want people to feel like that the market's running away from them or they're chasing it. And when you go too far too fast, not enough people are heading in the right direction. So sometimes digestion is good, so you can get more participation, more commitment, and better support. That could lead to a move higher. So I'd like to see a bit of sideways action before we head higher into bigger resistance.
And talking about 2 sectors we really want to drill into here, I want to go to industrials and agricultural stocks, because both sectors got really hammered. Both had solid days on Monday. Drop my pen there. I actually spoke to Stephanie Link, who's Director of Research for The Street, who says industrials could actually have the most upside surprise in earnings coming up. So is there a composure change happening with these 2 sectors?
Well, if you remember over the summer, it was the industrials that helped lead us lower.
Yeah.
And then over the course of the past month, we talked about how the industrials have acted a bit better, that they started to act more in line with the S&P versus lagging it. And they actually acted a little bit more frisky within this move. So if I show you the XLI in this last move, you will see that it's already breaking its minor downtrend. It took its 50-day moving average as well. It was a nice trade when it went back above this 2850 for that red dog reversal. Pause, continuation. I'd like to also see this go sideways, and then I think that the XLI could make a move up to this 33 area, which would mean a nice move for stocks within that group.
So then what about the stocks in the group? Because in earnings, this really could be a company-specific story rather than a sector story if you want to get those individual names. And 3 stocks that we were looking at were 3M, Caterpillar, and GE. And GE and 3M have really broad-based businesses, but Caterpillar is much more specific, which could be a good play or a bad play. I wanted to see which might be your favorite right now.
Caterpillar was weaker. A lot of people tried to be behind Caterpillar and even Deere during this whole market decline, and it was always showing relative weakness. Now you just saw a nice potent move, so the question now is, can it hold higher, go sideways? I think if you made some money here, you could stay with it. Okay, take a look at the chart of Caterpillar. You will see that here was your reversal like the market. Obviously this is when you could have got out when it broke 95, then retested and came all the way in. This was your entry. nice push back into resistance. You know, this area is not going to be so easy just to bust through on the first time. So if Caterpillar could hold, just say above this 75 area and go sideways again, next time it tries to go through 80, you could have a nice move up to 83 to 85. And then eventually, at some point this year, if we continue on this market move, no reason why we can't see 90 to 95.
And no doubt Caterpillar needs a strong economic recovery globally to really pop, but we did see in September that the company reported 3-month rolling orders from dealers was up about 34%. I mean, these are good fundamental things to think about if you're thinking about getting into Caterpillar.
I agree. And in another area, in GE, GE has been a stock that everyone owns. It's so widely owned. And there are times to be in GE that makes sense. If you look here, I see a tight pattern. Okay, if you take a look at the chart, you'll see that you have a defined area of resistance here, which I always like to trade against. You know, this was your reversal. This is when you could have got involved in a hole like most people did, you know, or tried to do, or missed. Anyway, then you broke this downtrend, and now, you know, it's up. It has room to get to this resistance, which is about 1645. And then if it could hover right around this area and hold above, just say this, you know, 1575 area and let the moving averages catch up, I think it blasts through this area, and you can see it move well into the mid-17s, maybe even back to 18 at some point this year. Here is your wall of resistance that could be used as your next pivot entry.
And real quick, I want to touch on the agricultural stocks, in particular Moo. Now, I said yesterday that Barron's had a pretty bullish article about this group over the weekend. I just want to pull one stat for you. I was rereading the article this morning. At the UN's Food and Agricultural Organization estimates that agricultural production will need to increase by 70% worldwide between now and 2050 to meet the needs of hungry people.
Man's got to eat.
Man and women got to eat.
All right, so everyone's got to eat.
All right, so then in terms of there's kind of two groups here. You want to go with the fertilizers, say the CFs and the potash, versus the Deeres, an equipment maker in St. Archer Daniels. Which one offers the best value right now?
Well, first let's take a quick look at the move because it was on the lows and it had a nice bounce. If you take a look here before I put it up, you know, this is this group. You know, very powerful bounce off the low. I know it was depressed. This was that one entry around 41, and if you've been trailing it, congrats. It did pop up above this minor downtrend. So I'd like to see this hold above, just say 45 for a bit and digest, just like the thesis. Digestion is good. And then you could see another move up to 48, 48.50, just like the stocks within the group. You know, CF move off the lows, you know, has some room back to about 155. And if you look at POT, you'll also see that it did have a move off the lows. I'd like to see it hold above this 44, 45 for a while. And then maybe it gets up to 50. But this is a broken sector for now. So it needs time. You need the right entries. You can't just blindly be buying these names.
And then same with Deere because it's at its 52-week lows. They're trading near it.
Yeah, same thing as it probably looks just like a Caterpillar. Take a quick look. You know, came off the lows. You know, popped back up. Has some room back to fill this gap. This gap gets filled right around 72 to 73. But there's gonna be a lot of resistance up around this 75. So if you entered here, you know, trail it up to about 72 to 75, and then it's definitely gonna get a pause around there.
All right, we'll be right back after this with how to trade earnings and some quick ways to make some cash. So stay with us.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, you know, we got to take off those glasses.
How to trade third quarter earnings season. It is the question of the day. All right, Scott, I'm going to put that to you now. Third quarter earnings estimates for the S&P 500 are 3% lower than they were a month ago. Knowing that, do you take stocks into earnings?
Well, it also depends on what stock and when. Not all stocks are created equal. Not all earnings plays are going to be the same. Some are going to run into earnings, okay, or run very far into earnings, and they're going to need to be blockbuster above the whisper numbers. Some are just going to be bouncing off the lows, so they're not going to need much. It's all going to be very stock specific. So today is important when we come out with Alcoa, not because Alcoa is such a big mover, but just psychologically, you know, you want to see stocks go up on earnings. And right now, Alcoa hasn't had such a huge move off the lows, so I don't think it's going to need that much to be somewhat exciting in this glass half full market.
Right, it's totally how you play the earnings expectation game. And with Alcoa, I was taking a look today that aluminum prices fell about 3.3% in the third quarter, but Alcoa tanked about 41%, but the outlook for aluminum prices isn't that hot. So you have to wonder, like, how much do they have to beat in order for the stock to pop? And if they just disappoint a little bit, could it really sell off? What's your strategy after you hear the numbers?
I think if it disappoints a little bit, it probably can go up. And if it comes in line, I think it still can go up. And Alcoa just, maybe it was overpunished because you look at that discrepancy between the stock and the aluminum prices, but we'll see. If you look here at the chart of Alcoa, you will see that it hasn't had much of a move off the lows. I know percentage-wise, it did once it triggered above this 9, it's back, above 10, so decent percentage, but look where it was at some point this summer. It was at 15. This was the real range around 12. So, I'd like to see it digest another day here in this $10 range, and I think if they're okay, it could have a move back to $11. I don't think, if you're long Alcoa for the long term, just stay with it. I don't think many traders are looking to position in Alcoa for what could be a blockbuster. But if we digest in the market, the gains of this market, Alcoa being up 10 cents tomorrow could be a catalyst for the Dow to be up another 150.
Right. And then talk about one stock traders might be looking at. It's definitely going to be JP Morgan reporting Thursday. Before the bell, S&P said that the whole financial sector earnings estimates have now been lowered 10% in the last 2 months. But JP Morgan's the best of the best. What are you expecting? What are you looking at in terms of stock?
This is going to be very, very important for the market moving forward. The financials have been a headwind. Everyone, including I think my dad told me that the earnings in the financials are going to be horrible. So then maybe it's priced in. So if you look at JP Morgan, I see a lot of downtrends in a lot of these financials that if they start breaking to the upside, you can have a juicy trade and it could help the indices. If you look here at JP Morgan, which I'm long right now for full disclosure, you will see that you have this descending channel, okay, that we've been following for a while. Finally, you had the reversal day. We're holding a bit higher. If JP Morgan starts to get above this 3260 area, it could break this descending channel and get to 34 to maybe 36, and that would be very, very helpful for the group. And just to show you one other that I'm watching is this Goldman Sachs. Look at this descending channel. This stock's come all the way from 150 this year. If this starts to get above this, just say 98, 99, you're going to see a pop back up to maybe 110, and that'll be very helpful.
Now, arguably, if JP Morgan does come out and the stock pops, Goldman could as well. Would you rather play the Goldman rather than the JP Morgan off of the quarter?
Yes, because I think JP Morgan is going to be a little bit of the crowded trade. So if JP Morgan comes out decent and it opens up, I'll be probably trading Goldman Sachs that morning. But we'll cross that bridge when we get there. These groups are going to play together, and if JP Morgan's bad and it goes up, that'll really have the shorts on the run.
All right, 2 quick stocks we want to hit on. Google reporting Thursday after the bell. Let's take a quick look at the chart to see what the support is looking at here.
Google has been a big disappointment over the course of the last 2 years. If you look at the weekly chart of 2 years, really, it's been in a range from 450 to 650. Last quarter, it came out with earnings, and look at this gap up, only to fail. Now it's back in the range. We had a great strategy and options profits last Thursday, right around here for this game. I would say for long-term Google holders, you have to stay in. For people playing for the play, I would buy, maybe if you're looking bullish, buy some 560 to 580 calls so your premium paid if they're really good and if they come out with a stock split. I have a thesis. I think Amazon, Apple, and Google all have to split their stocks. It's too overowned with institutions here. They need a psychological switch, and I think if they do so, this market will be on fire. Baidu split 10 for 1. It's at 124. That means it's at 1,200. Believe me, it wouldn't be at 1,200 if they didn't split 10 for 1.
All right, real quick though, IBM reporting next week seems to be having a solid run into earnings. Then what's the strategy?
It's running into earnings, so that's another different strategy. IBM will probably need a huge report considering the type of move that it's had.
Buy the rumor, sell the news kind of thing.
Exactly, and look right here. This was, how this is relative strength here. A low, higher low, higher low. Started taking off near the highs. This is a chosen one. Great for stock pickers. Congrats to you if you still own it. If it's at new highs going into earnings, it's going to need a huge report.
All right, 4 stocks, 1 minute. Let's do this. Sina, kind of flat yesterday. What are you doing?
Sina could be good for cash flow today. I'm going to be looking to buy it above 79.
And Netflix made new 52-week lows, reversing, just getting hammered on that deal tonight. It's doing a 180 on the Quickster.
Gross. I'll tell you right now that traders had a great time shorting yesterday because it was up $8. On CNBC, they talked about Goldman Sachs' upgrade. Couldn't go higher, so it went lower and it made new lows in the year. Avoid or short or just stay away.
Exxon had a nice move yesterday. Oil's up $10 in 1 week, settled around $76. That's Exxon. Now what?
I did buy it yesterday. It's one of my swing trades on the virtual floor. I think it goes higher still.
All right, and CSX, you're going to do a good options play after this, but quick, give me the trade.
CSX has had a big move. Okay, I still think there's room. If you take a quick look at the chart, the stock broke above this downtrend. It's right at the moving average. I still think it's in the game for higher prices. Could hit 22 to 22.60, but just be careful because it could digest a few more days before that happens, considering it just came from 18 to over 20 bucks.
All right, that was 4 stocks in 53 seconds. That was pretty good. All right, wrapping it up, we want to go to gold really quickly here. Had a big bounce of 2% on Monday. Seeing some profit taking today. Do you want to kind of be going long this dip?
Yeah, I think that traders going to try and take the GLDs and buy it for a negative to positive move. It tried to resolve this lower wedge or range to the upside. Take a quick look. You will see that it did start to get going above this area. So, a down open is probably welcome. You could buy it, and then if it starts to trade above yesterday's high of about 163.32, it could be on its way to fill this gap all the way up to about 167.
All right, that's it. That's it for our show today, everybody. Happy trading this Tuesday. I'm Alix Steele from the street.
And I'm Scott Redler from T3 Live. Make sure to follow us on the virtual trade floor in the chat. And if you can't do that intraday, tune in for the recap, and I'll tell you what worked and didn't.